Good morning and welcome to NYSE Live. I'm Ashley Mastronardi. Equities are fractionally lower this morning after the Dow Jones Industrial Average surpassed 50,000 for the first time ever on Friday to end at a record high. Buying has broadened out, benefiting economically sensitive sectors. Once Upon a Farm had a successful NYSE trading debut on Friday, too. Shares of the children's food company, co-founded by actress Jennifer Gardner, rose nearly 17% on the session to finish at $21.05 apiece. And investors will be paying close attention to fresh economic data arriving in the coming days. The delayed January jobs report is due on Wednesday. That's ahead of market open, closely followed by the delayed January CPI report on Friday. Earnings will also, of course, be in focus as NYSE-listed industry giants like Coca-Cola, CVS, and Ford are set to release their latest quarterly figures. And here's what else is on tap this hour. Intercontinental Exchange, the parent company of the New York Stock Exchange, delivered the latest insights on the housing market earlier this morning. Andy Walden, ICE's head of mortgage and housing market research, will join me to break down the latest trends. While the Seattle Seahawks won the big game on Sunday, several commercials during the event scored big with fans. You can find out which ads scored the highest marks, according to one industry expert. Plus, Sydney Sweeney is here at the New York Stock Exchange to ring the opening bell, along with NYSE-listed American Eagle. The actress joined forces with the apparel brand for its fall 2025 denim campaign. Well, earlier this morning, NYSE parent company Intercontinental Exchange released the latest edition of the Mortgage Monitor. It revealed that lower mortgage rates put nearly 5 million borrowers, quote, in the money, end quote, for a refinance. Joining me now is Andy Walden, head of mortgage and housing market research for Intercontinental Exchange. Andy, welcome.
Good morning, Ashley. How are you?
Doing well. Welcome back. So we understand that declining mortgage rates unlock refinance opportunities for most people since early 2022. What does this reveal about the market's sensitivity to rate shifts, Andy?
Yeah, it's really a reflection of where borrowers have been buying homes from an interest rate perspective over the last couple of years, along with where rates have been fluctuating over the last few days as well. The most popular interest rate bands that we've seen from an interest rate perspective over the last 3 years out there in the market have really been in that high 6 to 7% range. And then you look at where mortgage rates have been over the last really 2 months out there in the market. They've been in that low 6% range. So these folks have been teetering kind of on the inside outside of that refinance incentive. I think we all know that the administration directed the GSEs to buy $200 billion in mortgage-backed securities earlier this year, which has compressed the spreads between 10-year yields and mortgage interest rate offerings out there in the market. And it's really moved some of these borrowers over the hump into that refinance incentive. So really kind of a reflection of not only where interest rates sit right now in terms of outstanding homeowners, but also where rates have been fluctuating over the last few weeks.
And generally speaking, how much or little do rates need to slide for refinancing activity to pick up?
Yeah, it really wouldn't take a whole lot more. Again, if you look at 10-year yields and where they're at right now, they're in the 4.25 range, and spreads between yields and mortgage rates have been in the 185 to 190 range. And so really all we need is for 10 years to go back down to where they were in that October, November timeframe last year. And that would be enough to pull mortgage rates down into the high fives, which is a number that we haven't seen for more than 3 years out there in the market, and kind of surpasses that psychological threshold that would move some of those homeowners to act as well. So really not a whole lot of movement would be needed in 10 years to get us into that 5 handle from a mortgage rate perspective.
All right. And Andy, according to your report, the monthly principal and interest payment needed to purchase a home fell by $164 on average. Based on that data, how is this affordability stacking up historically?
Yeah, when we look at home affordability out there in the market, home affordability, obviously we're quickly creeping up on the spring home buying season this year. Home affordability, when you compare it to the last few years, is the best that it's been dating all the way back to 2022. So certainly some improvement in the home affordability dynamics out there in the market. Certainly going to be a continued topic of conversation this year as well. When we look at it from a regional basis, Midwestern regions of the country 12 of those major markets are now back to long run averages. Areas like Chicago, Detroit, Memphis is back to long run averages as well. On the other side of the spectrum, though, when you get into coastal and more expensive markets, California, New York, Miami, certainly still stretched from a home affordability standpoint. We're a number of years until we get back to long run averages in those areas of the country. But certainly some green shoots here as we enter 2026 from an affordability perspective.
All right, and the Mortgage Monitor also shows that home price growth slowed to its weakest in a calendar year since 2011. But we understand that this varies across U.S. regions. Can you elaborate?
Yeah, when we look at home prices across the country, certainly some geographic variation from a home price perspective as well. You can kind of draw a diagonal line from kind of Washington down to Florida. When you get northeast of that diagonal line, home prices still largely moving in a positive direction, anywhere from 2, 3, 4% home price growth all the way up to 6% home price growth. When you get into areas of Connecticut, in New York, those are areas that are still largely supply constricted from where we've been over the last couple of years. When you get south and west of that, really centered around Florida, Texas, California, those are areas where you're still seeing home prices down from the same time last year. Gulf Coast of Florida still meaningfully below last year's level. Austin and San Antonio, Texas. And then again, you get into those California markets and largely kind of modest declines in home price growth. So we're still seeing those geographic divides that really define 2025 as we enter the spring home buying season of 2026.
All right, and do you foresee 2026 being a buyer's or a seller's market?
Yeah, nationally, it's still what I would call a neutral or a necessity market. Nationally, it's birth, deaths, divorces, those life events that drive folks to make home purchase activity out there across the country. But again, when you look across the country, it's that diagonal divide that's really dictating whether it's a seller's or buyer's market out there. Sellers still largely control the Midwest and Northeastern regions of the country where there's not a whole lot of supply. In the South and West, where you've seen supply levels start to pick up and even move into surplus territory at points in time last year. Certainly buyers have more negotiating power than they have over the last couple of years, maybe some more concessions to be found in those South and Western markets early this spring.
All right, and what housing market trends do you expect will come more into focus as we approach the spring?
Yeah, affordability is always a key topic of conversation. That'll continue to be the case early this year. You're not going to stop hearing the word home affordability and stop seeing those measurements pop up here throughout the 2026 home buying season. What's really going to move the needle, though, from a housing market perspective this year is the supply side of the house, right? It's what's driving those geographic differentiations that we're seeing right now. Again, the Northeast still 30, 40, 50, 60% short on supply in some of those areas of the country. That's what's driving those firmer home prices. In the South is that ballooning supply that we saw last year and then a little deflation at the end of last year. So the supply side dynamics are really going to be what we're watching closely this year to kind of tell us where home prices are going next.
All right, thank you, Andy Walden, head of mortgage and housing market research for Intercontinental Exchange.
All right, thank you, Ashley.
Coming up, while the Seahawks, Patriots, and Bad Bunny were the main attractions during the big game on Sunday, some notable brands won as well with their commercials. A media expert reveals her top choices next.
As we stand on the cusp of America's 250th anniversary, we're reminded of the principles that have powered the world's greatest economy.
The New York Stock Exchange is a cathedral of the capital markets, replete with rhythms and rituals that allocate resources towards socially valued uses. That story will reach a rare milestone when our republic marks its 250th year. Anniversaries of this magnitude demand more than just ceremony. They ask something of us. They invite us to reflect, to ensure that the future that we shape will prove to be worthy of the legacy that we've inherited.
Welcome back to NYSE Live. While the Seattle Seahawks took home the Lombardi Trophy after winning the big game on Sunday, several brands won off the field and the stakes were high. The average price for a 30-second commercial spot cost $8 million. Joining me is Ashley Collins, reporter and author of the Dealmakers column at The Ankler. Ashley, welcome.
Hi, thanks so much for having me.
Of course. So which Super Bowl ads stood out to you as winners for you this year and why?
The ones that I loved were funny, clever, and not overly convoluted. Like, you got the concept right away. It was a fun ride. It didn't feel like it dragged on. So I especially enjoyed the Michelob Ultra spot with Kurt Russell, where he played a whimsical sports montage ski coach kind of character, and the Pepsi ad with the Coca-Cola bear having an existential crisis because he realized he liked Pepsi better. And then the Amazon Alexa AI spot with Chris Hemsworth, where he's imagining all of these ways that their Alexa might try to kill him, which I think leans into sort of the general sense of fear around AI in a really darkly funny way.
And speaking of, we saw AI as a theme in the commercials. What other sectors or industries do you think gained the most from this game's big game ads?
Yeah, there was a lot of AI, a lot of pharma, a lot of other tech and food delivery, sports betting, almost no car ads outside of Toyota, which is a big NFL sponsor. There was really only one Volkswagen spot and one Cadillac spot, which is a big change.
All right, and I understand most Super Bowl ads pay the talent between $1 and $3 million. Why is it in that range, and can big stars get even more money?
Yeah, that's generally the sweet spot, even for some of the bigger stars, unless they're part of a broader campaign that goes on well after the Super Bowl. And the reason is it's become a bit of a badge of honor for someone to be part of a Super Bowl commercial. And people understand that the airtime is expensive, the production is expensive, so they're willing to take a little bit less money than they might for a different endorsement opportunity to be part of Super Bowl Sunday.
And I also understand you've said that a lot of people that typically wouldn't do endorsements, or celebrities that typically wouldn't do endorsements, actually do Super Bowl ads. Why is that?
It's just fun to get swept up in the moment. And so many of these spots are cinematic now. You're getting major directors making these things, and it's just fun, and they're so well executed, and it's a big part of the culture and the conversation. And it's one of the last places where appointment viewing still exists. Everybody is watching on Super Bowl Sunday.
All right, and how do brands decide which celebrities actually fit their messaging?
Sometimes it's just that they want a particular person because they like them. This year, it was all about instantly recognizable faces. You saw a lot of Oscar winners and A-listers, Adrian Brody, George Clooney, Emma Stone, Matthew McConaughey, Kurt Russell. There were also a lot of comedians and big musical artists and athletes and a couple of influencers. So no matter what kinds of pop culture you're a fan of, there was somebody who you automatically recognized during one of these ads.
And do you think celebrities and comedy are a typical theme we're going to keep seeing over and over in Super Bowl commercials?
Yeah, humor is easy and it's fun. And especially when things are heavy in the world, it's nice to keep it light in a Super Bowl ad. You didn't notice too many serious ads. There were a few sentimental heartstrings ones, like the Lay's father-daughter farming one that got me. There wasn't really anything super political. There were a couple of social messages. but it was just a nice break from all of the things that are going on in the world to have a moment and have fun together.
And Ashley, what do you think matters more now, the ad itself or the buzz that it's going to create after the game?
It's a mix. So you want to catch people's attention during the game, but the goal is usually to either sell a subscription or a product. Sometimes it's to check a box and make the board of directors happy, like, hey, look, we were at the Super Bowl. But for the most part, you're trying to bring new people into your brand. And so you want to not just catch their attention in the moment, but keep it from Monday on.
And how important is social media in extending the life and impact of Super Bowl ads? And do you think a brand will choose a celebrity if they have a larger following on social?
It's really important because that's where all of the engagement happens. That's where the consumers can respond to the advertising. And obviously, if you're looking at somebody like Bradley Cooper, you don't care if Bradley Cooper is active on TikTok and Instagram. But if you're looking at a couple of people and you're maybe having a hard time trying to decide which one you want to go with, it makes sense for brands to go with the person who's more active on social and is going to be out there further engaging with the content after the day is over.
All right. Thank you, Ashley Collins, reporter and author of the Dealmakers column at The Ankler.
Thank you.
Coming up, the NYSE celebrated several IPOs this past week. The CFO of one company explained how his firm plans to more than double its physical footprint by 2035. Hear what he had to say next.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of the American financial system than this one.
At the NYSE, we applaud SEC Chairman Atkins and the entire Trump administration for working to reduce the burdens on existing public companies and soon-to-be public companies.
I believe that we will ensure that the American story, which began in many ways just steps outside, is preserved not by memory or speeches alone, but by the courage of those who are determined to chart its next chapter.
When we talk about the titans of industry and we talk about the titans of finance, there's a reason that we're all coming together still after all these years to the corner of Wall and Broad Street.
We are ringing the opening bell this morning to celebrate the launch of 6 new ETFs by direction.
We look forward to many more. I mean, today's 6, we're going to do hundreds more.
The New York Stock Exchange, the home of ETFs.
Welcome back to NYSE Live. IPOs were a popular theme here at the New York Stock Exchange last week, with several companies celebrating their first day of trading at the NYSE. That includes Bob's Discount Furniture, which rang the opening bell this past Thursday. The Connecticut-based retailer, which turns 35 this year, began trading under the ticker symbol BOBS and scored a winning session during its first session on the exchange. The company's CFO, Carl Lukacs, sat down with me to discuss the significance of this milestone moment. Take a listen. Stock Exchange.
We are so excited for this milestone. Really, it's all about our team, and the heart of Bob's is our team members. 5,800 employees, millions of customers, coast to coast. We have over 30 years of a brand heritage. So this means so much to the team members that have long, deep-standing relationships with the Bob's brand.
What is the Bob's Way principle and culture?
You know, it's honesty, integrity, transparency, and of course, a lot of fun. And we bring that to life in everything we do. We bring it in how we sell. We sell with no gimmicks, no promotion, and we always make sure the customer has full transparency on what they're getting. And really, value to us is about quality, it's about style, experience, and price, of course. And we are always the best price on the market, 20 to 25% below our competitors' listed price and 10% below promoted price. So we're always the best value in the market.
So many people have a special memory or connection to Bob's. They remember the commercials in the 90s and the 2000s. And a lot of people have reflected back to me that they feel like it's a local neighborhood store, but you're actually have locations across the country. How do you maintain that mom and pop feel while scaling at the level that you have?
You know, we are coast to coast now. So we have over 200 locations and we're in 5 separate regions, the West, the Midwest, Mid-Atlantic, New England, and New York. And the way we've scaled is always making sure the Bob's Way continues to expand as we grow our units. So it's keeping our core principles. The Bob's Way remains consistent. And we really just make sure that we're putting the customer first, delivering value without compromise. And we have so much growth and white space potential, over 500 locations by 2035. And our confidence in this plan is really driven by dots on a map for every one of those locations, our track record of opening stores, and we have really strong unit economics. So 60% by year 2, and 80% by year 5.
One of your mottos is that value is always in vogue.
That's right.
How do you maintain affordable prices and keep the quality high while scaling at the level that you're scaling?
It really is about how we built the business. That's what's unchanged for over 30 years. We buy narrow and we buy deep. So that strategy allows us to have less SKUs than our competitors and have a curated assortment. That gives us buyer power. We're able to reduce cost both with our vendors and as we distribute products through our supply chain. We've also, as we build density, we build even more buyer power. So it's just a really great way to maintain low cost and always give that back to the customer. That also allows us to be in stock. So 86% of our inventory is available to be delivered in 3 days. So the customer can not only get the product they want, but they can get it quickly in 3 days.
That's always a pain point when getting furniture delivered is the months-long waiting period. How do you get it, to customers in 3 days?
Well, we buy narrow and deep. So the inventory is on hand. 86% is available to be shipped when the customer wants it in about 3 days. So this really resonates with customers, and they're looking for an omni-channel experience. So not only do they want to engage with us in store, but they also engage with us online. So they go through both channels, and we make sure we give them an excellent experience in both channels.
How do you plan to allocate the capital raised in the IPO?
Post-IPO, we are going to be debt-free with a healthy balance sheet. We are a free cash flow positive business. We use our operating cash flow to fuel our growth. So the use of proceeds for the IPO will be to pay down the debt.
I know you mentioned growing to 500 stores by 2035. What will growth look like in addition to that post-IPO for Bob's?
It's the same growth we've done for 30 years. So our historical unit growth CAGR is around 12%. This is around 10% to get to 2035 by 10 years to get that 500 plus potential. So it's the exact same thing we've done. We're going to keep opening stores in our existing markets, our 5 regions. And we're going to couple that with new greenfield locations. So just last year in 2025, we expanded into North Carolina, and we're going to continue to grow contiguously down into the Southeast. So in 26, we're going to go into South Carolina and into Tennessee. So we're already seeing great success as we go down to the Southeast, and we're looking to continue expanding.
All right. Thanks, Carl Lukacs, CFO of Bob's Discount Furniture. Sydney Sweeney and American Eagle will ring the opening bell at 9:30 Eastern. But first, another firm that went public on the NYSE last week was Once Upon a Farm. It's a children's nutrition brand co-founded by actress Jennifer Gardner. Shares of OFRM jumped by 17% in its first day of trade on Friday. Let's take you back to that celebration.
16 years ago, an anonymous person released an idea onto the internet. No identity, no institution behind it, no marketing strategy. It was just a white paper and a challenge to everything we thought about money. What if money were open instead of closed? What if it belonged to everyone instead of being controlled by a few? Bitcoin survived every attempt to kill it because the idea itself was stronger than the forces that tried to stop it. And now, today, inside one of the most iconic institutions in the world of finance, we honor a creator who never asked for credit, never stood in front of cameras, and ultimately stepped away so that the idea could stand on its own. Satoshi Nakamoto.
Why are we here? Because Magnum Ice Cream Company is an ambitious company. We're all about growth. And for growth, you need people and you need to have belief that focus on only ice cream will propel this business. These folks here in the room wake up every morning thinking about ice cream, and they go to bed thinking about ice cream. And that's why it will be a successful company that delights the world with unbelievable products.
Welcome back to NYSE Live. In just a moment, NYSE listed American Eagle Outfitters will ring the opening bell along with a special guest. Actress Sydney Sweeney, who just made her way up to the podium, teamed up with American Eagle as the face of its fall 2025 denim campaign. She's going to ring the bell alongside the company's chairman and CEO, Jay Schottenstein. American Eagle Outfitters has been trading on the New York Stock Exchange for nearly 2 decades, officially joining the NYSE community back in 2007 as a transfer. And since the company's founding in 1977, American Eagle Outfitters provides an array of clothing through multiple brands. This includes jeans, accessories, and personal care products under the American Eagle brand, intimates, activewear, and swim collections under its Aerie brand, as well as menswear through Todd Snyder, New York, and women's luxury fashion under the Unsubscribed brand. We are going to go up to that bell podium. Sydney Sweeney is up there, excited to ring the opening bell to open today's session with American Eagle. Sydney Sweeney on the podium, of course, dressed in denim with American Eagle. And stocks are officially open for trade. Joining me is Ed O'Gorman. He's the CEO and CIO of River Wealth Advisors. Ed, welcome.
Good morning. Thank you for having me.
Of course. So what are you going to be watching most closely as trading gets underway for this week?
I think this week is going to be interesting to see if we have, follow on from last week and, really software under pressure, the AI rotation we've been watching really for the past couple of months. We really want to see how that unfolds this week.
All right, and we're also in the heart of earnings season, of course. More than 100 S&P 500 companies reported last week. What's your assessment of the earnings that have come out so far?
It's been a really strong reporting cycle for the fourth quarter. Looks like earnings are going to come in around 13% improvement. It'll be the fifth straight quarter of double-digit earnings growth for the S&P 500, looking at significant outperformance of expectations, both in earnings and in revenue. So, so far so good.
All right, and we also heard from many of the 6 of the 7 Mag 7 companies. What do you think it tells us about AI spending and AI moving forward?
Just tremendous spending coming our way. 100% increase in spending at Google, 50% increase at Amazon. Just tremendous spending. Looking at over 600 billion of spending this year, up significantly from last year. So clearly, more of spending to come, more investment in AI to come, and a lot more to really unfold and try to understand, what is the ROI long term on these investments.
All right, and what are sectors or industry groups are you favoring right now?
I think with this rotation, looking at more value-oriented areas of the market, areas that were underinvested last year, we're seeing really good returns and earnings numbers out of industrials, interest in materials, even utilities. So really just kind of looking away from those positions and sectors that have had abnormally large returns over the past couple of years and looking for opportunities elsewhere.
And we also have jobs and inflation data coming out in the following days. What are you anticipating?
Well, with the market's anticipating about a 70,000 increase in jobs on Wednesday. That's on the heels of a 50,000 increase. There's really been mixed numbers coming out, significant layoffs going back almost to 2009 levels with challenger numbers last week. Jolts were disappointing. So, we'll have to see what we have this week in terms of employment numbers, but certainly a softening labor market. CPI could be a big market mover if numbers disappoint relative to expectations, really kind of looking for 2.5% numbers this week. But again, that's something the market's going to watch closely.
All right, and the Fed, of course, kept interest rates unchanged in January, and President Trump nominated Kevin Warsh as the next Fed chair. What impact, Ed, do you think it could have on potential rate cuts in 2026?
Well, I think he was a surprising pick. There was some satisfaction, at least from the market's perspective. It doesn't seem like the market is too concerned with the pick. Relatively stable performance after the announcement. But he tends to be a hawkish leaning guy over the past. And so it'll be interesting to see where he is now sort of marrying easing short-term rates with shrinking a balance sheet as an offset. So, expect things to be a bit different, but it's a board, right? So he has fellow board members that he needs to weigh his way and really build consensus. So we'll see how that plays out.
All right, and where do you see opportunities for investors in the fixed income space?
I think, fixed income, again, a great year last year, really tremendous performance on not only coupon, but also rates coming down. This year, I think, is going to be a bit more subdued. It's one of those markets where sometimes fixed income investors sort of try to reach into pockets of the market searching for yield. I think that can be a dangerous move. Right now, I think, corporate investment grade provides a nice yield pickup, certainly adding some international exposure, emerging market debt provides some additional yield. But looking at high yield and really junk, right now, really not that appealing. Historically tight yields there, just not a lot of value for taking the risk. So we're playing it fairly safe here at River Wealth. and sticking with, the investment grade piece of the market.
All right, thank you, Ed O'Gorman, CEO and CIO of River Wealth Advisors.
Thank you.
Still to come, NYSE-listed Planet Labs is on a mission to build AI data centers in outer space. Its CEO shared the details, as well as his thoughts on why they'll be more efficient than data centers here on Earth. And speaking of AI, Iola just introduced its latest AI solution, Quasar, which allows organizations to adapt transcription decisions in real time. Its co-founder is going to tell me why it's such a game changer. And later on, automated communications platform Blip is looking to stand out when it comes to conversational commerce. The company's CEO explained how it's revolutionizing the way people communicate. Stick around.
I'm just so honored and so grateful to you, Lynn, for welcoming us to announce our Time Person of the Year, the architects of AI. I want to take a moment to welcome Chris Lehane. You have been an incredible driving force, making AI accessible to everyone, and we are so glad that you are here with us today. We are focusing on the leaders and the people and the humans that are imagining and building this future that we will all be living in.
We had somebody ask us recently, why are you going out at this time of the year? The reason we're doing this is for our people. It's not about us. Our motivation for doing this transaction is to make this a better place for the next generation. We have a stewardship responsibility to our people to give them a professional and a financial opportunity that's better than what we have. And what I am very proud of is the team that we have here. This is a true partnership in every sense of the word.
Welcome back to NYSE Live. Shares of NYSE-listed Earth imaging company Planet Labs skyrocketed on Friday, ending the session 9% higher. But that's not the only reason why the company is making news. This past December, I spoke with CEO Will Marshall about everything from its more recent earnings report to building AI data centers in outer space. Take a listen.
It's an excellent quarter of results. We were very proud of our efforts. So we reached over $80 million in revenue. That's our highest revenue quarter in the company's history, 33% growth over the prior year. We raised our guidance up for the full year by about 5% beyond what we had anticipated for this quarter results. We also indicated that we'll continue our higher growth rate into next year. So we feel very good about that. We were adjusted EBITDA profitable for the fourth quarter in a row, free cash flow profitable for the third quarter in a row. And it was the first time we reached Rule of 40, which meant a good balance between growth and EBITDA. I think this is all because the business is humming. We also sell satellites, satellite services for sovereign satellites to countries, and that business is humming as well.
And I understand that Planet Labs is helping launch AI data centers in space. What is the vision behind this initiative, and how is that even possible?
Us space geeks in the space community have been working on ideas like this for decades. We've been talking about eventually it makes sense to put energy-intensive infrastructure off the Earth's surface and into space because it's actually ultimately cheaper. The barrier has been that launch costs and satellite costs have been so high, it never made sense to put all that stuff upstairs because of the sheer cost of getting it up. But once you get up, once those costs come down to a certain point, it is actually more efficient. And here's why. In space, we get about 8 times the solar power as you get on the Earth's surface for a given solar cell. You don't have to build all those buildings. You don't have to have cooling. You have free cooling out to the cold depths of space. So there's a lot of things that are fundamentally more efficient. The only thing standing in the way is getting it up there, basically. But launch costs have come down. Scaled infrastructure costs have come down. We have pioneered building large fleets of satellites at low cost. There's basically only 2 companies in the world that have done that. That's SpaceX and Planet. Built hundreds and hundreds of satellites, launched them at low cost. And this has finally got to the point where it makes serious sense to start putting data centers in space. So Google approached us about potentially doing this because they have huge data center demands. They are running out of space. They can't build them fast enough for the demand. Space is the obvious place. It's finally getting low enough cost to do that. So what we're doing is we're doing a couple of tech demos. It's an early phase right now. We're doing tech demos where we will launch a couple of satellites to test the basic technology. We'll be taking their TPUs into space, seeing how they work, testing communications between 2 satellites, close flying in formation flying through space, so that we can test the formation of a cluster of these things that would ultimately become a data center in space.
All right, and besides AI data centers, what is next for Planet Labs?
Well, look, I think the most exciting thing is where AI is going on top of all of our data. We have imaged the whole Earth every day for the last 9 years. It's a deep stack, over 3,000 images for every point on the Earth's landmass. AI is enabling us today to understand and do simple queries of the internet. That's what you do when you do text chats on ChatGPT and Gemini and Claude. With our data, imagine the power of being able to do that for the physical planet, not just query the text of the internet, but to query the physical planet, to ask it about floods and fires, to ask it about how we stop deforestation, to ask it about security issues around the world, to have an understanding of the planet in real time will help people across a wide variety of markets. We are bringing AI into the real world with real world data that can answer a myriad questions. So we think of it like large Earth models rather than large language models. And they're going to have a profound change on what is possible to answer. So add space data and AI, and those 2 disciplines are basically getting married. And we are going to see a tremendous implication for applications of AI as a result.
Thanks, Planet Labs Chief Executive Will Marshall, for that interview. Well, earlier this morning, Israeli-based enterprise conversational AI company Iola introduced Quasar, which the firm says is designed to deliver more consistent and reliable automatic speech recognition. Iola co-founder and president Amir Haramadi joins me now. Amir, welcome.
Thank you for having me, Ashley.
Can you tell us about your business and walk us through Quasar?
Absolutely. So actually we're in a crisis, a big data crisis with everything that happens with AI. And it was amazing to watch the ads last night at the Super Bowl, how much was all about AI and AI agents. Everything starts with data. And agents always going to go as far as the data underneath. Now, there are very few things people hate more than entering data. So we got a problem in New York because it's all about data, there's not enough data, and speech is the most natural form of communication. So the challenge is how to use speech to be able to do it in any language, accent, acoustic environment, and jargon, and capture the information in a way it's never been done before. Until now, every technology that was developed was specific language models for that specific, but it's one size fits all. And what we realize actually that one size fits all. And you need to be able to guarantee performance, and that's Quasar is all about.
So what exactly is Quasar doing?
So Quasar realized that we don't want to play the language model Olympics, because at the end of the day, it's going to come fast and furious. There are going to be many new models coming all the time. And what customers really care about is they want to ensure the quality of the automatic speech recognition language, the model, are always going to be the very best to guarantee performance. So basically what Quasar does, besides being the shiniest object in the universe, that's what Quasar stands for, by the way, is the ability to do a real-time in production assessment of the best language model for the specific use case for the specific clients. So it doesn't care what model you use. we can guarantee is going to get the best accuracy, the shortest latency, and the best price. And that's a revolution because it becomes an automatic speech recognition model router that just guarantee performance.
So what are the use cases for it?
Oh, endless. So anything from any agentic exchanges. And again, we can speak in a very quiet studio as we do right here, or we can be on a floor where it's very noisy, or we can speak in different languages and accents. And the speech for us, it's data that we turn into highly structured data. So it could be a call center that right now a speaker calls and speaks perfect English from London, or he speaks broken English from Israel. Still, you want to make sure that the data capture is an absolute maximum accuracy, shorted latency. So any interaction from customer service, financial services, field service, any agentic interaction, keep in mind, we're talking about 2.7 billion frontline workers. Most of those people are not sitting behind the desk. They need to interact with an agent, for example, with an AI agent. Speech is the most natural form of communication. You want to make sure that regardless of the language, the accent, the acoustic environment, and specific jargon, you capture an unparalleled accuracy. So until now, we have seen an uneven floor, an inconsistent performance. Now we can guarantee that in real time, we can switch to the best performing model to ensure the most accurate data coming in as spoken data.
And why is it important to capture data accurately?
Because at the end of the day, data fuels everything. And right now, wherever you go in every enterprises, most CEOs will tell you they have a data challenge. They don't capture enough, it's not structured enough, and the best way to do it is by speech. Thank God that's already been established because we've seen right now, speech or voice is the fastest CAGR, the compounded aggregated growth rate across all categories. The amount of money goes in this space is second to none right now. So we passed that psychological barrier, now it's all about performance. And what Iola does, we guarantee that performance through Quasar. That's truly a game changer.
And how can people find out more about Quasar and Iola?
Simple enough. Iola.ai, all the information as of this morning is out there. And this is really a game changer. Not only that it changes the technology and performance, it actually makes it accessible for anyone. So any technology company or any traditional enterprise company can use it. We shorten the barriers, we eliminate them, and anyone right now can use speech as a data entry and a proper accuracy, and that's what we're all about.
All right, Amir Haramadi from Iola, thank you so much for joining us at the New York Stock Exchange.
Thank you, Ashley. Thank you for having me.
Coming up, Brazilian-based company Blip says it's standing out across the conversational commerce ecosystem in Brazil. Hear what its CEO had to say about it next.
I know 100 years isn't much in the New York Stock Exchange laurels, but we're very proud. First U.S. airline to reach 100. The resilience and the determination to move forward despite all odds is something that I think we're all proud of. We've had a great opportunity to celebrate this year. The power of obsessing on our customers is what makes Delta really great. And my superpower, I'd like to think, is obsessing on them, on these people, so that they can go do the job. And it's not just me, it's our leadership team in terms of making it happen.
It's a bit of a pinch me moment. I mean, everyone's here. Here we just rung the New York Stock Exchange bell. In a lot of ways, it's a dream come true. When you walk around the NYSE floor, it's just emblematic of the American dream. Look, if I can do it, others can do it too. So believe in yourself, work hard, be the best you can be every day, and it compounds.
A plan to go and change the way people fly. It is the next step. When we look back at what we've promised to go do and then we go do it, it'll be the foundation of our business that builds us to the next step And it's because of the people here and what you all did, which was enabling greatness.
Welcome back to NYSE Live. Endeavor Week in New York City brought together entrepreneurs shaping the future around the world, with several of those leaders making a stop right here at the NYSE. That includes Roberto Oliveira, co-founder and CEO of Blip. It's a Brazilian-based communications platform powered by, of course, AI. He shared more details about his platform and how it's thriving in the conversational commerce space. Take a listen.
Blip is a kind of lucky company because what we started to do in 1999 is becoming the next big trend in tech. That is, we call conversational commerce. But basically what we do, we help brands to use messaging apps like WhatsApp, for example, to do engagement, customer support, sales. And now with the advance of AI, it's working amazingly. So yes, we just crossed 200 million in ARR, and we are living a very exciting time.
If I'm a Blip user, what is my experience like? What services am I getting, and who are your customers?
Yes, we are a B2B2C company, so we sell to brands, and we help those brands to have conversations with their customers through messaging apps. So in Brazil, WhatsApp is the most important, most popular. But for example, here in USA, I don't know if it's already common, but it's not a matter of if, it's a matter of when you will be able to interact with brands the same way you interact with each other. So probably using the iMessage app or the Android message app, or maybe through ChatGPT, you will be able to have conversations, direct conversations with brands. And what we do is basically help the brands to have good conversations, and today we are very focused on big enterprise. More than 300 out of the 500 biggest brands in Brazil use Blip to be inside WhatsApp, do engagement, customer support, and sales.
All right, and I understand that you have been in the, quote, conversational market since its early days, since the ringtone days. What is the conversational market, and what is your place in it right now?
Yeah, it's funny because probably you will not remember, but in 2000s, we didn't have smartphones. We used that Nokia phones that basically the only way to connect to internet was through SMS. So the way that we sell ringtone that time was through conversations. So we invented a concept that time that to sell a ringtone, we basically need to send the name of the song that you want to buy, and we were able to understand, build a conversation with you, sell that song for you, and charge on the carrier's bills, and it worked amazingly. Ringtone was a gigantic business from 2001 to 2008, and we start since that time. After the ringtones, what happened? We started to help brands to use SMS to do conversations too. But when we decided to bet that WhatsApp could become an open platform, we believe that we will be able to help the brands to have any kind of conversations. So using WhatsApp, we help the brands to solve any kind of need that users have through a conversation through WhatsApp. So it's a digital conversation, and it's the way that the people prefer to communicate today. So imagine if instead to make a phone call to a brand, you can just send an iMessage. Probably you prefer a lot to be supported through this messaging chain. So it's happening very fast in Brazil. Brazil is a very WhatsApp-centric country. But what we believe is that it's not only on Latin America, this kind of experience will happening all over the world, especially because of the new kind of AI technology that's accelerating a lot the capability of delivering good interactions that feels like human interactions. So it's funny.
And I understand that in 1999, you say that not many people believed in messaging, and you made a big bet on it. Did that bet pay off?
Yes. It was not a bet on messaging, but we learned the power of messaging, the power of the conversations. The bet at that time was in ringtones. We decided to bet that we learned that ringtones was exploding around the world, and we decided to build a platform to help the carriers in Brazil to sell ringtones to their consumers. We were very successful on that. And because the only way to connect to the clouds, to the internet, through a mobile phone that time was SMS, everything was built over a conversational interface, over messaging exchanging. So at that time we learned the potential of sell songs, for example, but it's not songs. You can sell any kind of product through a digital conversation. So we learned with that. And after learning that, we decided to bet on those modern messaging apps becoming open platforms and using the technology that we built at that time and all the knowledge that we learned at that time, we are helping them to sell apartments, sell cars, to sell clothes, to sell education, loans, basically any kind of a company nowadays use Blip to interact with their clients.
Thanks, Roberto Oliveira, for that interview. Before we go, we're going to take one last look at the markets. Equities are fractionally lower, less than 30 minutes into today's session after the Dow Jones Industrial Average surpassed 50,000 for the first time ever on Friday to end at a record high. We will see you tomorrow at 9 a.m. Eastern.
Welcome to the public market.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of American financial system than this one.
So thrilled for this next chapter to begin today with all of you in this historic building.
The day we went public, it was the most bizarre day of my life. He said, yesterday, Shake Shack was the most beloved hamburger company in the entire country. Today, it's going to be the most reviled stock. He said, you guys are never going to grow into your $46 valuation. How many Shacks did we have 10 years ago? 31 Shacks. And did I not just hear Rob say that we're going to have 1,500 Shacks? So yes, we grew into that $46. It's all because of you guys. I'm so proud of you, every one of you. You work so hard to make so many people happy, and you make your communities better. What more could you ask for?